My name is Tyler. Welcome back to the channel, guys. We are talking about the best options trading strategy to use and implement during this upcoming earnings season. Any earnings season, really, but this one is going to be particularly big given the volatility in the market. And this strategy really lets you win on both sides. If the stock goes up or down, you'll win on the trade, and it takes very minimal options trading knowledge. So if you guys get anything useful out of the video, hit the like button, comment down below, and subscribe to the channel. And big shout out to each and every single one of you guys that have hit the subscribe button and the notification bell. I do greatly appreciate each and every single one of you guys. Now getting right into it, the strategy we are talking about is performing a strangle, or just a strangle. Now you want to do this only around earnings or some kind of event coming up that can move a stock a lot in one direction, either up or down. Call for up, put for down. So I'm going to demonstrate on the Snapchat on how I would do this, and please bear in mind and stick with me through the video if this is kind of hard to understand, because this is coming from somebody who knows all options trading strategies, has studied all of them, and knows all of them. So it's kind of hard to explain something like this because I don't go off of the Greeks or anything like that. That stuff really just wastes your time and it'll lead you in the wrong direction. So with Snapchat, should go back and look. The earnings day is April 22nd. So earnings is April 22nd. If you were going to do a strangle on this, I will show you guys exactly what I would do. So April 22nd is the earnings, so I would not do the April 23rd strike, just because if the stock moves up or down but not enough to make your options in the money, then you will get clapped because that option expires the next day. Now the April 30th, this is what I would do, me personally, because even if the stock didn't move at all, your options might drop 50%. So you like both of them drop 50%. So you would still walk away with some kind of value. And then if there's a continuation during the earnings, that's where your contracts can make a lot of money. Now, sometimes doing this, more times than not with the strangle, it ends up paying off a lot. But just show you guys exactly what I'm doing. And like I said, it's very important to only do this during earnings. There's no point in doing this any other time. This is only one tool in the toolbox. And this is the only time that it really works effectively because you need some kind of news that will move the stock. So let's buy one call for $51, and you pretty much want to go about the same price. So if you don't want to do the exact math, like 85 minus 63.85, and figure out exactly how much difference it is, you can, relatively speaking, go off the price of the premium, which is the amount you're paying. So this is $51 for a $85 call expiring April 30th. Then I'm going to go to the put side, and I'm going to go to something that is roughly the same price, if not the same price, and this $49 put is $51. So I would do this and basically, send it through, long strangle. So you're strangling it one, and then you get filled at the 102 more than likely. If not, you might have to go to 109, whatever the case is. But it is very effective, guys. Now, what you guys can do as well, if you want to play it bigger, there's not really a difference between risk and reward. I would honestly just get further out contracts. I would get more of the contracts that I was talking about, the further out the money calls and puts. But if you do want to play it closer to the money, it's unfortunate that a stock like Snapchat's earnings are Thursday. It's better to do this on let's say an expiration week where you have earnings on Tuesday, because you have a couple extra days to get some more premium or protect yourself more or less. So see, I would do something along the lines, I mean, you could just straight up buy this call at the money and then buy this put at the money, and then that's going to cost you $838. You're essentially going to need an $8.38 move come earnings to make money on this. So this is not a good trade whatsoever. You're better off just doing the Aprils at the money. So you basically do the same thing. The put, why do I keep doing that? The call, it'd be $900, but you'd have an extra week and it's pretty much the same put and calls, 50-cent difference on one of those, but it's $9. So you need a $9 or $900. So you would need a $9 move in your direction once you're in the money, and you're basically at the strike, so you'd be in the money. So on the call side, you'd need Snapchat to go to $73 come earnings. So that's, you know, a $9 move. And then as far as to the downside, you need the same thing. So you're looking at about $53, which is quite possible with high growth stocks like this. That is why it is so good to play further out the money with a strangle, because you don't put a lot down. And if the stock does move a lot, you can make a ton of money off of it. And I actually have done this before on Snapchat. I don't remember exactly when, though, because it was earnings quite a while ago. I'm going to see real quick if I can find it. It was a nice chunk of change. Sell. Yeah, right here. See, bought a $37 strike call October 30th for $24. I sold it for $154. And the $35 one I bought for $25 and sold it for $265. So that was a 1,000% move, $25 into $265, more than 1,000%, a little bit more than 1,000%. And this one was about 700%, 800%. So this was with the strangle. I do have some more. See, I bought the $25 put October 23rd for two of them for $35. Then did I end up selling those out? Nope, I let those expire. So yeah, that is basically what a strangle can do. You guys seen that, $25 into $265 and $24 into $156, something like that. So that is a quite significant amount. That was about $50 into $400 and some odd change. So you can make a lot of money doing this, and that was with a straddle. So I did pay $70 for the back end of it, for the put side, and I mean, you could sell those contracts out, but all in all, you end up making a ton of money if your stock moves in your direction that you are betting on, and that is the call and the puts, but you just need a bigger move in one direction or the other. After this video, I hope you guys have a good understanding of what a strangle is, how to do it, and when to do it. And just a little recap, you only want to do this around news events or specifically earnings where a stock can move 5 to 25% off of one day of earnings, one announcement, whatever the case is, that can move a lot up or down, and you're basically playing both directions. Now, just to be clear, you guys are not going to know exactly how to do this and how to do this successfully, or what to do, what to look for. You're not going to completely understand it just after one video or even a couple videos. You're really going to have to go phantom do it. I mean, go do it for yourselves and actually put in the order like I was doing, but don't send it through, and kind of just re-go over it over and over and over and over again in your head so that you do understand it. So when you go to do it, you're not doing the wrong thing and losing quite a bit of money. So with that being said, if you guys have any other questions, if this was not explained good enough, comment down below, let me know so we can talk about it down there. I might make a more in-depth exact detail video, but that will get quite boring. But if you guys want to see that and you're very confused on this still, then make sure to comment down below, let me know that, as well as if you guys want to learn different options trading strategies. I know I do strategy videos, I wouldn't say very often, but I will do them more often because there's so many other strategies that I could talk about. I pretty much know everything, at least what is found as of right now. People come up with different strategies all the time, but I pretty much know it all, so we can talk about it on this channel. Let me know down below what you guys want to see more of. I'm gonna get out of here. You guys have a good one. Have a good day of trading tomorrow. Peace out.